And welcome back to another Econ podcast with Mr. Hagan. And on this podcast, we're going to continue to talk about the firm foundation theory of investing. Before we do, I just want to remind viewers that this video is not designed. It is not designed to give investment advice. Its purpose is educational only. This video and other videos in this playlist are designed to teach about different theories of investing. If you want investment advice, please see a professional. Okay, so let's get back to the education side here and talk about the firm foundation theory. In our last video, or on a previous video, we said that the first theory of the stock market we were going to look at was the firm foundation theory. And we said the firm foundation theory is focused on the concept of intrinsic value, that we have to find the intrinsic value of a company and then compare that intrinsic value to the market price. So we want to compare market price to intrinsic value. And that's going to give us buy and sell signals. So we said very simply, if the market price is below what we believe is the intrinsic value, then we buy the company. We buy, in this case, we were buying a card. If the price is above the intrinsic value, then we want to sell the company or sell the card or whatever the product is that we're talking about. So we did this with regards to a Honus Wagner baseball card. Now we want to take a look at doing this with a company. And so to do that, let's first imagine, or let's first ask the question of what were the items that we would consider or that we would use to determine the intrinsic value of a company. So just like when we were talking about the Honus Wagner baseball card, we said what were the things we would use to determine the intrinsic value of a Honus Wagner baseball card. And they were like the condition of the card, the player, the age of the card, the scarcity of the card, things like that. We now want to say, well, what are the things that we would look at for a company to determine their intrinsic value? And that would be things like, of course, dividends and earnings, obviously, but what determines a company's dividends and earnings? So let's say, or see if we come up with a list of what are the items that would determine the intrinsic value of a company. What would determine how we value or determine the value, the real value of a company? So it would be obviously anything that's going to affect earnings and dividends. So what might those things be? We might say things like, how many factories does the company have? How many factories does the firm own? So, maybe they own factories in China. Maybe they own factories in the United States. Maybe they own factories in Mexico. Maybe they own factories in Europe, things like that. How many factories do they own? We might ask about we might care about the brand name of the company. Is the brand name well known around the world? Um, Something like Coca-Cola has an enormous brand name. It's known all over the world. That would be an important thing to take into account. Maybe we would take into account the quality of the managers of the company, like the CEO, the chief executive officer. What kind of person is that person running the company? What kind of degree do they have? Things like this. We might take into account the business model of the company. What's their goal? Are they trying to sell? Are they trying to sell luxury items where they're selling few units of the good at very high prices, or are they trying to sell to a large number of people? Is it a mass product that they're selling at a low price to many, many people? We might ask, are there any lawsuits currently against the company? Okay. Are there any lawsuits? Is the company being sued for some reason? Are there any lawsuits against the company? So all kind of things like this we would take into account to try to figure out what we think are going to be. Keep in mind what all these are about. All these are about trying to figure out what will be the company's earnings and what will be the company's dividends. Okay, what would be the company's earnings and what will be their dividends? Because those are the two things that we ultimately care about. So we look at all these different things about the company. We use that to try to figure out what we think will be their earnings and dividends. And then we use the earnings and dividends to determine what we believe is the intrinsic value of the company. Now, when we talk about a company, we want to state that intrinsic value. We want to state that intrinsic value in terms of a share price. So we might say, let's say after studying some company, whatever the company is, after looking at all of this information about the company and trying to figure out the earnings and dividends and therefore the intrinsic value, let's say that we decide that we believe that the intrinsic value of the company, let's say we believe that the intrinsic value of the company is $40 per share. That's what we believe is the intrinsic value of the company, $40 per share. $40 per share. We believe that's the intrinsic value of the company. So the question then that I was asking, or that I'm asking right here is, assume that the current market price is $50 per share. The question then becomes, should we buy or sell this stock? And it all depends on what we believe is the intrinsic value. So if this goes back to, let's go back to the previous page here for a second. This goes back to our two rules. This goes back to our two rules here at the bottom. Is the market price higher or lower than the intrinsic value? That's what gives us the buy or sell signal. Okay, these rules for trading down here is what will give us our buy or sell signal. So let's go back. Let's go back and figure out whether or not we would buy or sell this company. So we would buy or sell this company by looking at the intrinsic value compared to the share price. Well, the share price is $50 per share, which is greater than the intrinsic value. So the current share price is $50 per share. That's the current share price. That's the market price. And that is higher than the intrinsic value. Now remember, we always believe this is what Firm Foundation is all about. We always believe that the share price is eventually, in the long run, going to return to the intrinsic value. So if the intrinsic value is $40 per share and the current market price is $50 per share, then we would say our recommendation would be that if we own this company, we should sell the company. Why? Because we could currently get $50 per share for the company, and we believe that it's going to fall to $40 per share. So as a result, we would issue a sell signal. So here's the simple rule. We believe this. We believe this is all based on the assumption that someday the price will return to the intrinsic value. That's the key. All investing comes down then to accurately determining the intrinsic value of the company. We got to accurately determine what we believe is the intrinsic value of the company, and then that will tell us whether to buy or sell. Okay, that'll tell us whether to buy or sell. So let's kind of do a quick summary of this. We would then say this down here at the bottom. If we believe that the intrinsic value is $40 per share, if that's what we believe, so let's write that down. We believe that the intrinsic value is $40 per share after studying the company, after studying the earnings and the dividends. We believe that the intrinsic value is $40 per share. So then we would simply say this. If the market price were $50 per share, then it's higher than the intrinsic value, we would say sell. If, on the other hand, the market price were $20 per share, if that were the current market price, then we would say buy. Because why? Let's just say this one more time. Because we believe that the market price will eventually return to the intrinsic value. That's the key to Firm Foundation. All right, this has been Mr. Hagan on another Econ podcast. Thanks for joining me, and we'll see you on the next podcast.